20 years after the bestseller Market Wizards, Jack Schwager writes The Unknown Market Wizards, where he introduces these solo traders that operate in complete obscurity and achieve performance results that far surpass the vast majority of professional asset managers. The author found traders whose records matched those of the traders in the first Market Wizards book and did it in an environment far less favorable than the unique markets of the inflationary 1970s. In this video, we will present to you the key takeaways from the interview with Peter Brandt, a futures trader who, after over a decade of spectacular success following his initial failed attempts, lost his edge, went cold turkey on trading for 11 years, and then resumed trading for a second lengthy span of outstanding performance. We are excited to announce the launch of the Read and Grow podcast. Now you have one more medium where you can listen to your favorite book summaries. Subscribing to our show on Apple Podcast or Spotify would be greatly appreciated. Thank you. It's interesting to note that what many think is most important to becoming a successful trader, the methodology for entering trades, is actually one of the least important elements for Peter Brandt. In fact, he believes that classical chart analysis has lost its edge. Charts will give you the idea of the path of least resistance, but they don't forecast. Charts are wonderful in finding specific spots for asymmetric risk-reward trades, and that's it. Brandt's edge comes from discipline, patience, and order execution. His methodology is based on risk management. Protective stops are integral to Brandt's trading methodology. Whenever he takes a trade, he limits his risk to about 0.5% of his equity from the point of entry. He wants to have his stops at break-even or better within 2 or 3 days of entry. Even though the initial stops are very close, once he's ahead, he will give the market much more latitude. He will close half the position once the profits of the trade equal 1% of his equity, and then ride the trade with the second half. His profit target will usually be a point equivalent to about 2% of his equity. One of Brandt's trading rules is to not speculate with a loss. He learned a long time ago that if you speculate with a loss to get less of a loss, you end up with more of a loss. A trader's job is to take losses. A losing trade doesn't imply you did anything wrong. You can do the right thing and still lose money. Another of Brandt's trading rules is the Friday rule. He has learned that it's best to liquidate any trade that shows an open loss as of the Friday close. And on the flip side, many of his most profitable trades came from Friday breakouts. The Friday close is the most critical price of the week because it is the price at which people commit to accepting the risk of holding a position over the weekend. Peter Brandt does almost all his chart analysis and trading decisions for the coming week during the weekend. He places the orders and then stays alert for an opportunity to tighten his stops. He doesn't trade intraday. He admits that if he sits and watches the computer screen all day, he will sabotage himself. Brandt knows that he is his own worst enemy and that his natural instincts will often lead him astray. It's only when he overrides his instincts through the process of disciplined order entry that he puts himself in the position where what he does with charts can work for him. For him, what works is a disciplined approach. Make a decision, place the order, and live with it. The trader talks about his 11-year break from the markets. He reveals that the fun of trading had left him in 1995. He felt like he had lost his edge and didn't know how to get it back. It was emotionally difficult for him to live with the gap between how he was performing and how he knew he could perform. So he closed his account and didn't look at a chart for 11 years. And then in 2006, he abruptly decided to start trading again. The way it ended didn't sit well with him, so he couldn't let it be the last word. In retrospect, Brandt answers the question of what to do during those periods where everything you do seems to be wrong and you're just out of sync with the markets. His advice is to not ask yourself what you need to change in your trading. Just cut trading size and go back to the basics, but don't mess with your methodology. That's the only way to come out of a drawdown and get back on track. Brandt admits that besides his skill and drive, there is also some significant luck involved in his success story. He did the wrong thing in the beginning by trading much too large, and it worked out exceptionally well, but he could have just as easily blown his account. Not everyone is that lucky. When asked what advice he would give to someone who wanted to pursue a trading career, Peter Brandt answers that you need to be sure you want to trade. Don't confuse wanting to be rich with wanting to trade. Unless you love the endeavor, you are unlikely to succeed. Make sure you have 3 to 5 years to achieve trading competency and become a profitable trader. If you can't afford to lose everything you put in, don't trade. If you enjoyed this video, you're sure to like Paul Tudor Jones' interview from the first Market Wizards book. Thank you for watching.